Welcome to ANZ's Trade and Supply Chain series, Trade Finance in the Spotlight. In this episode, we discuss letters of credit, also referred to as documentary credits or LCs. We will review the main parties involved in a letter of credit and how letter of credit transactions work. Letters of credit are used extensively throughout the world as a payment mechanism for settlement of trade transactions because they offer a secure means of payment to sellers. Letters of credit deal primarily with shipping and commercial documents, which represent the goods in a trade transaction, instead of dealing with the underlying goods themselves. There are at least three parties typically involved in a letter of credit transaction. The party buying the goods is referred to as the applicant. It is the applicant who requests their bank to issue a letter of credit in favour of the seller. The bank, which issues the letter of credit, is referred to as the issuing bank. It issues the letter of credit on behalf of its client, the applicant. In its letter of credit, the issuing bank provides an irrevocable undertaking to make a payment to the beneficiary on presentation of documents stipulated in the letter of credit, which comply with the terms of the letter of credit. The beneficiary is the party in whose favour the letter of credit is issued. The beneficiary is typically the seller in a letter of credit transaction. Apart from the three parties described, the applicant, issuing bank, and beneficiary, a letter of credit transaction may also have the involvement of an advising bank, a nominated bank, and in some cases a confirming bank. An advising bank is a bank to which the issuing bank sends the letter of credit and is the bank that notifies the beneficiary that a letter of credit has been issued in their favour. The advising bank authenticates whether the letter of credit has been sent by the issuing bank and provides the beneficiary with a copy of the letter of credit. The nominated bank is the bank that is authorised by the issuing bank to pay, accept, or purchase the drafts and/or documents presented by the beneficiary. Finally, the confirming bank is the bank that, at the request of the issuing bank, provides its own undertaking in addition to that of the issuing bank to make payment to the beneficiary on presentation of documents which comply with the terms and conditions of the letter of credit. We will look at the role of a nominated bank and confirming bank in more detail in later episodes. Phase 1. Issuance of a letter of credit. How does it work? Firstly, the buyer and seller enter into a sales contract and agree to use a letter of credit as the payment instrument. Secondly, the buyer applies to their bank with which they have a credit facility for a letter of credit to be issued in favour of the seller. Thirdly, the issuing bank issues and transmits the letter of credit to the advising bank. The advising bank is usually located in the same country as the seller. And fourthly, the advising bank authenticates whether the letter of credit has been issued by the issuing bank and provides a copy of the letter of credit to the beneficiary. Phase 2. Presentation of documents and payment. How does it work? Firstly, the beneficiary ships the goods and prepares the documents as required in the letter of credit. Secondly, the beneficiary presents documents stipulated in the letter of credit to the nominated bank for examination against the terms of the letter of credit. Thirdly, the nominated bank examines the documents for compliance with the terms and conditions of the letter of credit. Fourthly, if the documents are compliant, the nominated bank, which has agreed to act as per its nomination, will pay the beneficiary. Fifthly, the nominated bank will then forward the documents to the issuing bank. The issuing bank will examine these documents for compliance with the terms and conditions of the letter of credit. If the documents are compliant, the issuing bank will debit the applicant's account and pay the nominated bank. The issuing bank will then forward the documents on to the applicant. It is important to note that payment by the nominated bank and the issuing bank is based on examination of documents alone. In a letter of credit transaction, payment by banks is not linked to the status of the underlying goods or shipment. Cite a nuisance letter of credit. Letters of credit can be used for immediate payment upon presentation of documents to the nominated bank or issuing bank, which comply with the letter of credit terms and conditions. These are called cite letters of credit. Alternatively, a letter of credit may stipulate that payment will be effected on a future date, after presentation of documents to the nominated bank or issuing bank, which comply with the letter of credit terms and conditions. For example, 30 days after shipment. These are called usance or term letters of credit. In usance letters of credit, the beneficiary will get paid on the future date, which is referred to as the maturity date. A nominated bank or issuing bank may agree to pay the beneficiary earlier than the maturity date, subject to special financing agreements. Today's session has covered a range of terms crucial to the operation of a letter of credit transaction. These terms in review have included the applicant, or the party buying the goods, the issuing bank, which issues the letter of credit, the beneficiary, or the party in whose favour the letter of credit is issued, the advising bank, or the bank to which the issuing bank sends the letter of credit, the nominated bank, or the bank that is authorised by the issuing bank to pay, accept or purchase the drafts and/or documents presented by the beneficiary, and the confirming bank, or the bank that at the request of the issuing bank provides its own undertaking in addition to that of the issuing bank to make a payment to the beneficiary. In conclusion, let's revisit what we've talked about today. We've looked at what letters of credit are, the parties involved in a letter of credit transaction, and how letters of credit work. We hope you found this presentation useful. In the next episode, we'll discuss the benefits of letters of credit. Watch this space for more coverage on other trade-related topics.